Just so you know, they have a little bit of a track record of this. So in 2018, it looked like there was going to be inflation, and Powell tried to get ahead of it, and he raised rates, and the market completely collapsed. And they were looking, I think, at Chinese data at the time, and it looked like, China was turning, going crazy. Then China completely turned over. It was a complete head fake. The economy wasn't rip-roaring. Inflation didn't exist. And they basically just curtailed a lot of investment and destroyed a bunch of value. So this time around, I think they're very sensitive to not correcting too quickly. But then the opposite thing happened, which is they probably waited a little too long. And now, we're correcting too slowly, too late into the cycle. And we're just sort of digesting that reality. And so I think that, we're probably, to be honest with you, we've puked it all out for the most part, in my opinion. You have to remember, right? The big difference between now and even 10 and frankly, more importantly, 20, 30, 40, 50 years ago is how many computers are involved that trade, how much passive money is involved that owns assets, and how much of this stuff is sitting on the sidelines still in money market accounts and munis. So if you look at those markets, there is a ton, trillions of dollars waiting to find a home. And what we've now done, and Brad's charts show this, is we've basically chopped the head off of all of these fast-growing growth multiples. The underlying companies have not changed one scintilla, right? These companies are still growing by crazy amounts. Like Snowflake is still an incredible business.
Unbelievable.
But the multiple that one was willing to pay has been very much re-rated, as is a bunch of other companies.
So let me ask you a question, Chamath. If we've gone from these 50, 60, 70 multiples times sales, and now it goes back down to 20, is that, dare I say, a buy signal? Well, and will those trillions of dollars start moving back in? Because who wants to be in a money market?
I don't know, and I can't really call these things. But a really smart person that I talked to this week, he actually liquidated everything in October and November. And, I don't know, we talked about this on the pod, but, I was feeling so much tension at the end of last year. I actually, when I look back on Q4, it was probably the most difficult quarter of my professional life in just trying to manage risk. And I exited a ton of positions. All my pipes, my third-party pipes, I basically sold off except for one. I generated some liquidity in other places as well. And I was glad that I did that, in part because I saw, what he was doing, and in part because, Jeff and Elon were selling. And I thought, this is crazy to sit on the sidelines and, be the bag holder here. Going into Q1, I talked to the same guys, and what he said to me, which I think is very smart, is you have to really look at the first and second derivative of the 10-year bond. Because when that stops moving, the 10-year bond is this beautiful barometer of the collective wisdom of every single investor in the world about what they think about long-term growth and inflation. And it's a really important market. We've talked many times. Look at the 10-year break even if you want to understand where inflation is going. We started to talk about that 7 months ago. And if you look at that, the rate of change, so the volatility in the 10-year yield is slowing way down. And if that continues to hold, that means that people are really saying there's a small amount of real inflation, a reasonable amount of transitory inflation, and we're about to kind of wash most of it through the system with, 100 basis points of rate hikes. And if that's the case, then you may see a quick pullback, in Q1, and we're back to the races again because of all this other money that's going to say, I got to get back in. And if you look at all these corrections in the world of computer traded algorithms and ETFs and passive money, and it's all, the snapbacks are so fast. You correct 20% and then whoop, you whip it back and you go. So I don't know. That's one view based on the past. I don't think a single thing in the last quarter has changed in the underlying fundamentals of the majority of businesses that are public. And I actually think for the most part, nothing has really materially changed for the majority of private companies. All that's changed is what you're willing to pay in the future for it.